Here are the crypto top headlines covered in this video. Bitcoin may hit $200,000 by mid-2025 as price drops will remain mild, says Bitfinex. Next, stablecoins will see explosive growth in 2025 as world embraces asset class. Also, relationship building is a hedge against debanking, says OKX Exec. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: Bitcoin may hit $200,000 by mid-2025 as price drops will remain mild, says Bitfinex. Bitfinex analysts said that increasing Bitcoin institutional adoption will create strong demand-side pressure, making Bitcoin price dips in 2025 short and temporary. Bitcoin price dips will be short-lived in 2025 due to strong institutional demand, say Bitfinex analysts, who predicted a best-case scenario of Bitcoin doubling in price by June 2025. Bitfinex analysts said in a December 17th market report that their minimum price estimates stand at $145,000 by mid-2025, potentially stretching to $200,000 under favorable conditions. Bitcoin volatility expected in first quarter. Our view is that any corrections in 2025 will remain mild, thanks to institutional inflows, the analyst said. They noted that while Bitcoin volatility is expected in Q1 2025, the broader trend suggests continued price growth, driven by ongoing inflows into spot Bitcoin exchange-traded funds and increased global and institutional adoption. About $36 billion has flowed into United States-based spot Bitcoin ETFs since they launched in January, Farsight Investors data shows. The BTC ETFs are one of the largest cohorts of Bitcoin holders at over 1.13 million BTC, the analyst said. At the time of publication, Bitcoin was trading at $105,360, a price that Castle Island Ventures partner Nick Carter said could grow nearly ninefold in the long term. Long term, I'm looking for Bitcoin to match the market cap of gold, which would price Bitcoin at $900,000, Carter told Bloomberg Television on December 17th. Bitcoin author Andy Edstrom said on December 16th that he is already struggling to get used to the fact that $1,000 is less than a 1% move in Bitcoin's price. Bitfinex analysts said that if Bitcoin mirrors the 2021 cycle with a roughly 40% increase above its moving averages, it could potentially reach around $339,000. In the less likely scenario that the extended 2017 cycle repeats with similar diminishing returns, Bitcoin could peak around $290,000 by early 2026, they said. U.S. Bitcoin Reserve may change the narrative. Meanwhile, the possibility of the incoming Trump administration creating a strategic Bitcoin reserve in the United States has the crypto industry speculating that the market narrative could move into uncharted territory. If one country implements a Bitcoin strategic reserve, you can kiss goodbye to your 4-year cycles, crypto analyst Tyler Durden said in a December 17th X post. After Donald Trump won the election on November 5th, pro-crypto Senator Cynthia Lummis said she would move forward with legislation for the U.S. government to buy Bitcoin and hold it for at least 20 years. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: Stablecoins will see explosive growth in 2025 as world embraces asset class. Stablecoins will see a bright future in 2025 with massive growth and mass adoption supercharging the asset class. The stablecoin market is set to close 2024 with exceptional developments and records. What should we expect in 2025? Even more achievements as mass adoption begins to take hold. Before looking to the future, however, we must examine what we are leaving behind. 2024 stablecoin market. During 2024, the trends of the previous years have continued. Major issuers like Tether and Circle experimented with stablecoins tied to currencies other than the US dollar, but adoption has been slow. Euro-backed stablecoins remain a niche product with relatively low market capitalizations, and even big-name entrants have struggled. The market has shown a clear preference for Tether's USDT and Circle's USD coin, and very few people want to try something new. This hesitancy might result from the shadow of past collapses, such as the 2022 implosion of Terraform Labs and its Terra USD or UST stablecoin, which resulted in many people losing a lot of money. The collapse shook trust in algorithmic and decentralized stablecoins, and their market share remains minimal compared with USDT and USDC, though they still have their supporters. Overall, 2024 has been very positive for the crypto world. Bitcoin soared to $100,000, regulatory frameworks are being developed globally, and traditional financial institutions have begun dipping their toes into the market. The total issuance of stablecoins has continued to grow, with new records being set along the way. In Singapore, stablecoin payments reached $1 billion in value, and their usage is expected to continue growing worldwide. Looking ahead, here are 4 predictions for stablecoin market in 2025. Regulated stablecoins rise. In 2025, we will likely see more stablecoins issued by financial institutions. Tether has already demonstrated the profitability of this model, netting $5.2 billion in the first half of 2024 after placing reserves in U.S. Treasury bonds. The strategy goes like this. Number 1, launch a regulated stablecoin. Number 2, negotiate with a prominent exchange to promote it. And number 3, earn consistent yields by investing in fiat reserves. For promotion, the exchange removes commissions on the stablecoin, which of course attracts clients to it. This formula is too attractive for traditional financial giants to ignore. Banks step in with custody services. The European Union's Markets in Crypto Assets, or MiCA, regulation, set to be fully implemented by January 2025, will serve as a significant catalyst. MiCA requires stablecoin issuers to obtain licenses and provide a clear framework for financial institutions to enter the crypto market. This regulatory clarity will open the door for banks to offer custody services, which are vital for integrating crypto in traditional financial systems. Custody solutions enable banks to safely store digital assets on behalf of their clients, serving institutional investors and cautious retail users. Markets shift in Europe. At present, there are concerns around Tether's USDT stablecoin. It dominates the market but lacks the necessary licensing for MiCA compliance, and there are rumors that exchanges are preparing to delist USDT for European users. If Tether doesn't secure a license, it risks losing significant market share in the region. Such a moment may open the door for regulated alternatives such as USDC, which has already obtained the necessary European approvals. MiCA's framework might encourage local players to enter the market with euro-backed stablecoins, creating more competition and potentially shifting the market dynamics away from dollar-centric options. Stablecoins expand to local currencies. Another trend to watch in 2025 is the growth of stablecoins tied to local currencies. In 2024, the Central Bank of the United Arab Emirates approved the launch of the dirham-backed stablecoin, AECoin, which it said will be the first stablecoin the central bank will regulate. Local stablecoins will be integrated into local banking systems as they gain traction as countries increasingly look to digitize their economies. The future of stablecoins by the end of 2025. The overall trajectory of stablecoins is promising. In 2025, the stablecoin market will not just grow, it will mature. More explicit regulations, new entrants, and broader adoption will transition stablecoins from niche financial tool to mainstream asset class. Stablecoins will offer faster, cheaper, and more inclusive financial services and be integrated with traditional finance. 2025 will see the beginning of mass adoption. The market was previously dominated by semi-professional players, but with the arrival of MiCA in Europe and President-elect Donald Trump in the United States, more new players will come. The market is also expecting new friendlier laws on cryptocurrencies. The combined capitalization of USDT and USDC might double or even triple, with the overall market size expected to grow. Localized stablecoins will play an increasing role as well, which could challenge the dollar's dominance and diversify the market. Our next top headline, relationship building is a hedge against debanking, says OKX Exec. Documents released on December 6th show the Federal Deposit Insurance Corporation, or FDIC, asked banks to pause crypto-related activities. The entire crypto industry faced threats of debanking under Operation Chokepoint 2.0. Jason Liu, the Chief Innovation Officer at crypto exchange and self-custody wallet provider OKX, told Cointelegraph that fostering relationships with banks and key holders was a hedge against debanking. Liu said the traditional financial world is heavily based on trust, and that relationship building with banking institutions, financial regulators, and other stakeholders was key to maintaining solid partnerships, Liu told Cointelegraph in an interview. You need to take the time to build relationships with all your stakeholders, including regulators and your banking partners. We've spent years and years working with our partners and stakeholders to make sure they understand our business. Many Operation 2.0 debanking stories came from the United States and U.S.-based entities. However, debanking remains a global problem with implications for business, technological innovation, and freedom of speech. Debanking around the world. According to the former regional manager of Binance Australia, Ben Rose, the exchange received only 12 hours' notice before being debanked. Rose claimed that the reasons for the abrupt debanking, which occurred in the middle of the night, were unclear. In July 2023, leaked documents revealed United Kingdom politician Nigel Farage was debanked due to his political views. This caused UK politicians to propose stripping banks of their licenses if the banks violated freedom of speech. The UK government laid out several consumer protection provisions for banks, including a 3-month notice to customers before account closures, an explicit reason for account closure, and a chance to appeal the closure. Crypto companies also reported being turned away by UK banks in 2023. Common problems included excessive paperwork, account freezes, and application rejections without sufficient reasons. The problem was so widespread that the crypto industry executives brought the issue to the attention of former UK Prime Minister Rishi Sunak. However, crypto firms and projects are still reporting the same issues in 2024. Debanking even made the Collins Dictionary shortlist for Words of the Year in 2023 due to the widespread usage of the word in online circles and digital culture. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.